Hey, good afternoon, everyone. It is about 10 minutes to 2 on Sunday, October 16th, 2022. This is Forex Brizio, and I hope everybody's doing well. And I know it's been a bit since I've made a video, so thought I would just pop in here for a quick one and just talk about a couple of things. And, as always, guys, anything I talk about on this channel is just strictly examining the charts and price action, and it's not trading advice. I don't give signals. I don't tell people to trade anything. You do your own analysis and come to your own conclusions and take your own trades. Obviously, I don't know anything about your trading style or your risk or your account or anything like that. Okay, so just always keep that in mind. But anyways, guys, couple of updates here before I just run through basically just 5 charts. I've kind of made the decision to dramatically cut back what I look at with Forex, and there's a couple of reasons for that. So I'm down to just trading 5 pairs now. At one point, if you guys have been following the channel for a while, I had more than 20 pairs I was following, and then I cut it down to under 20, then down to 15, then down to like 12. Now I'm down to 5, and I think for now this is where I'm going to leave it. And there's a couple of reasons for that. One is just to try to increase my focus a little bit on these, because it just got to be mentally too much for me to just continue to look at so many pairs. And I think if you're, of course, this is a really personal decision, about how many pairs you look at. So I'm not going to sit here and tell you what you should do. I would just say in general that if you're more of a long-term position trader and, you don't take a lot of trades because maybe, you take trades only off higher time frames, then I think looking at multiple currency pairs is fine, because you're not going to get a lot of trades. And so if you're looking at higher time frames, your signals are going to be fewer and far between, and therefore your analysis should be faster to do, because the prices move so slow on the higher time frames that it should be very easy for you to just quickly scan through and see if there's anything setting up. It's not like, the speed of action of being a day trader or certainly a scalper, which I'm not. So I like to, day trade and maybe, short-term swing trade. And so that requires a lot more, examination of price and fundamentals and what's going on in the market. And it just was getting to be a little bit too much for me. So I just kind of made the decision a couple of weeks ago to start cutting back, and I've kind of cut it down to what I feel, is manageable, down to 5 pairs, majors, not all the majors, but, the ones that I'm comfortable with, ones I were trading already. I just eliminated a lot of the other ones. Okay. And the other reason why is because I'm also trading in the futures market. I'm trading stock index futures, particularly. So this is my other broker here. So this is the E-mini Dow, and I also trade the E-mini Nasdaq, E-mini S&P, and E-mini Russell 2000. These are completely different markets, but I've actually been really enjoying trading these. It's only 4 markets to look at. This one here is the DAX, which I don't really trade because that's a Europeans, the German index. But because of the time of day that moves, I don't really do anything with that. It's really just these 4. And I do find that in terms of analyzing the charts, of course, these are very sensitive to the same things Forex pairs are in terms of news, financials, especially what's going on, with things like inflation and interest rates are very important to these markets. Because they're tied back to stocks, and so they're very sensitive again to particularly things like interest rates and pure economic news. Like I said, particularly things like interest rate and inflation, and so they're very good. And I do find that taking trades on them, when one moves, all 4 of them tend to move pretty much in tandem. So when I'm looking for trades on here, I usually enter on, say, a 15-minute to a 1 hour. But I do find that for confirmation, when I look through all 4 of them, generally if there's going to be a trade and the price is impulsively moving where I want to jump in, all 4 of them are probably moving just like that. If you look through the charts, they are all very similar. because even though they're made up of different baskets of stocks, the NASDAQ, as you guys probably know, is more like tech stocks, and the Dow and the S&P are more of that, broader stocks, and the Russell is more of like small cap stocks. And so, but generally, because they're all tied back to stocks, they generally do move very similar to each other. And so I've been trading this a lot more often than even Forex, and I've been enjoying it. I'm actually doing fairly well with it. And so I'm going to have a little bit more focus on this. These are definitely, to me, are day trades. These markets are open about 22 hours a day, but I do not trade them during the off-market session. I only trade them during the New York session, which for these markets is from 9:30 a.m. to 4:30 p.m. New York time. Like I said, I don't trade them in the pre-market or the overnight session at all. That's just my decision. But generally I'm in and out the same day. So these are most certainly are day trading opportunities. So again, that's taken a little bit more of my focus, and so that was another reason why I cut back on my Forex pairs too. Okay, so maybe perhaps as I go forward, I'm still kind of learning these markets. I'll start making videos on trading these markets, but this is a different broker I had to set up. This is really, I'm really enjoying these. But anyway, so let's get back to Forex for a minute. Okay, so the 5 pairs that I'm down to is Euro dollar, dollar yen, pound dollar, Euro pound, and Aussie dollar. Okay, and that's it. It's the only 5 I'm trading. So I'm just going to quickly run through what I'm looking at for this coming week, and then we'll just probably end it there. So on the Aussie dollar, so the way I look at these, I'll just say right now there's no trade in this market. You can see we've been in this substantial downtrend. So what I'm really looking for, guys, are pullbacks on this 4-hour. This is a 4-hour chart, and I'm looking for a nice Fibonacci retracement back. And so you can see we're currently, the last trade entry was right here, and obviously we've gone well past that. And we're reaching down into these lows. So there's no entry right here. This would be a terrible fill. But I will point out on the weekly chart that we are heading down into some potential support areas on the weekly chart. We have one right here, and then we have the bigger one down here. So these are the areas just to kind of keep an eye on. It doesn't mean it won't just blow right through these and keep going, but I'm just saying these are areas of interest where the price probably will at least run into some support levels. But that, these are weekly charts, so still quite a bit of ways. Even down to this first one is still 200 pips down, and it's about 450 pips down to this lower one. So there's still plenty of opportunity, but we're clearly in a downtrend. And I think as long as the dollar maintains its the run it's on, then these will continue, and I'll continue to look for Fibonacci pullbacks. And the way I basically been approaching these guys is, so on the daily chart, this is the 233 period exponential moving average channel and I talked about this in the previous video. I just set this up as a channel. So this is a 233 set to the high, and this one's set to the low, and it forms this channel. But you can see once the price starts really moving impulsively, you can't use this channel as a resistance area to trade off of like you could here and here, because the price is so impulsive. So you really can't use this anymore. So what I like to do is go down like the 1 hour or the 4 hour, and I'll look for Fibonacci retracements from a previous swing, and that's where I'll kind of look for opportunity. And also just based on, in this case, areas of opportunity where, the large players would tap into some bearish, some bearish areas on the chart where they can grab some liquidity and take the market lower. So, like I said, combination of Fibonacci retracements and just, pullbacks, on the chart into previous areas where there could be liquidity for them to tap into. And you can see right here, this was the last one, like I said, where they pulled back right into this area here. And this is probably also some kind of Fibonacci, maybe 38.2, it probably looks like. Yeah, actually 50%. You can see it went right to the 50 from this previous high down to here. And this was the entry. So, but again, that's already passed, so I'm not going to look to enter that. But again, on this pair, continue to look for shorts, just keeping in mind these weekly levels down here. We'll see what happens when we get down to here, or anywhere in between this zone right here. Okay, so Euro euro dollar, there's potential here for a short from the current levels. Now you can see on the daily chart, again, a lot like the Aussie dollar, continuing to move down. If you go to the 4 hour, so this was the last really excellent entry right here off of this swing high. We're on a 4 hour chart right now. You can see from a fib standpoint, we went, we didn't really hit an exact fib, but we went in between the 78 and the 61.8. But this is a good zone. But even if you don't use Fibonacci, if you just kind of look to the left here, grab my crosshair, you can see this is a great area. If you look back to the left, all these candles here where there was previous support all through here is a great area for it to tap into for more selling opportunity. And there is some resistance levels in here too, but it's mostly support. And when I'm looking for a retracement in a bearish market, I'm looking for candles that were previous support and not resistance. So I'm more interested in looking at candles where there was a well-defined support level, which clearly there is right through here, and that's where it went to. I'm less interested in the case of a bearish correction, a downside correction. I'm less interested in ones that acted as resistance. And we have a little bit of that, like right here and right in here, but you can see the bulk of this. There's a clear, pretty well-defined area right inside here, where price kind of reacted from previously, and that's exactly where we went into. So this was technically the entry. So where we are at now, down here, we could just continue lower from this area. I suspect, though, that we might see a little bit further pullback on this, back up, maybe back to these areas right here. If we put a Fibonacci onto this area, we went to the 50%, so we could easily just continue down, but I wouldn't be surprised if we see this bounce up and come back up into this area in here before we continue lower. So I'll continue to watch this. I do think there'll be another short opportunity if you're not already in one from here, but I wouldn't be surprised if we see a little bit more of a pullback before that happens. So I'll be going, looking for an entry perhaps down around the 1 hour chart if this moves up. Now, if this clears straight away and looks like it's just going to impulsively move down, then I might just take the short straight away. But I would not be surprised to see this bounce a little bit more. This is a pretty impulsive candle. This could just be like an ABC type correction where we had to move up for an A, down for B, and then up for C, back up into this area, which also is about the 61.8 fib retracement, and then see it continue down. But we'll see how it goes. Okay, but overall looking for shorts on the euro dollar. Okay, this is the euro pound, and you can see on euro pound, we've basically been trading on the weekly chart inside of a range for the last, basically the last 6 years. We've been inside this big range. Now, granted, this is a big range. This is a weekly chart. This is about 1,000 pip range from the highs to the lows, but we are trading inside of a range. And so right now it looks like we're kind of right back into the middle of the range. So we go down to a daily chart, and you can see we broke above the 233 channel here, pulled back, came up again, made this big run up, and we have this huge wick on the daily chart. I don't know if this probably was a news candle. I'd have to go back and see what happened on this day. But now we've pulled all the way back down again, back towards the moving average. So at this point, I'm probably looking ideally for maybe a long entry at some point, but I'd probably want to see price, now we're on the 4 hour chart, see price come up and clear out this area on the 4 hour chart, and then I think this would go higher, at least back to the previous highs. But this easily could just keep going down too. We could see another push down towards the moving average, back into some other liquidity. But, we did kind of come down and take out, into these areas for, and again, this is a correction to, if this is a correction to an uptrend, then I'm looking for more resistance candles in the past. And you can see right in this area, we do have that all in here, back here, back here. So this is kind of an important area to bounce from. So let's keep an eye on it. But like I said, I wouldn't be interested in any long positions unless we, show real bullish action to move back up here. But we did have, substantial bullish action here. And from a Fibonacci standpoint, well, I don't know. If you really want to count this wick, that's kind of crazy. But, we, around a 61.8 retracement. Okay. So overall, with this pair, looking for longs, but I'm not rushing into it. I'll wait for this thing to play out. But overall, that's how I feel about that pair right now. All right, dollar yen. Dollar yen has been on this incredible run. It just doesn't stop. And I don't know when this is going to stop. This is just unprecedented rally on this pair. And this is another one where, you really can't use the 233 for any pullbacks because the move is so parabolic and so strong that obviously the 233 is showing you the overall trend on the daily chart, which you don't need that to see that it's in an uptrend. But it's not going to help you in terms of entering the trend. So you have to go down to a shorter time frame. And again, use, Fibonacci retracements or whatever. To try to find entries on a shorter time frame, like here move up retracement, here move up retracement and up. So maybe around the 1 to 4 hour chart to look for pullbacks and entries, and that's what I'll continue to do on this pair until it shows you otherwise. Look, every time this thing runs up to a new high, we would have to see a significant move to the downside to erase this uptrend. Right now, you would have to come down and break structure below this low to even think about, short positions on this pair for the long term. Again, not talking about scalpers. I'm talking about day traders to swing traders. This is in an uptrend until it tells you otherwise. So, but again, because this move is so parabolic, you're going to have to use a shorter time frame to try to find pullbacks. You might be able, this is an hourly chart, maybe you could put a shorter term moving average on here and use that for pullbacks. Maybe a 50 period moving average or something, 100 period moving average for pullbacks. But I just assume just kind of visualize it and just kind of use Fibonacci or whatever to try to find entries. Okay. So yeah, bullish on the dollar yen until it tells you otherwise. Who knows how long this run can? It's gone on so long and so stretched out now. I don't know. But as long as the yen, the Bank of Japan doesn't raise interest rates, which so far they've shown no sign of wanting to do, they're the only major bank that has not raised interest rates in this recession, in this economic time of high inflation, and that's what's keeping the Japanese yen pushed down, which is causing these yen crosses, especially dollar yen, to rally. So unless there's a major change of heart on the strength of the dollar and or the Bank of Japan decides to raise interest rates, which would cause the yen to strengthen, then this uptrend will continue, and we'll just have to keep an eye on U.S. economic data as well as Bank of Japan interest rate decisions going forward. That's going to determine where this pair goes. Okay, and last but not least, the pound versus the dollar. And again, this one's a lot like the Aussie dollar. We've had this substantial down move here, and again, just to keep looking for pullbacks. And again, we can't use the 233 again because we're just in this parabolic down move. So again, down to a shorter time frame to kind of look for retracements off of previous highs, and we may have hit that right here. And we rallied up here. We had this beginning to move down again. We retraced back again, and perhaps we're going to continue the downtrend at this point. If we put a fib on this little move right here, we went right to the 78.6 and moving down. So let's see what happens. But again, my bias on this is continue to the downside. And I think, again, as long as the U.S. dollar holds on to its strength, that there's no reason to think this will do otherwise. Okay. And if we look at this down move, a little further out here, so, depending what you want to look at is from the last swing high, up here maybe, we went right to the 61.8 retracement on here. You can see looking left, we had again, a correction to a downtrend. I'm looking more for previous candles that were acting as support, which was right in here, and then you can see we responded off of that. If this was to go up more, this would be the next area where I'd look for it to rally back to in terms of shorts. But as of now, it could very well just go down from here. But if this did react and come up here, then I would say the next target to look for a shorting opportunity would be up around the 78.6 retracement. But it looks like maybe it wants to go down from here, and that would be fine too. And you just continue the downtrend. There's really nothing here on the weekly chart in terms of structure to violate. So again, this is all based on the US dollar maintaining its strong footing. If that changes, then, you know, kind of all bets are off. But for the moment, that's where we stand. Okay, so that's it, guys. You know, again, overall bias short on the Aussie dollar, short on the euro dollar, long on the euro pound, long on the dollar yen, and short on the pound dollar. Okay, all based on current standings and fundamentals, which are always subject to change. But that's from a structural standpoint. That's how I see those five pairs. Okay, so I'll leave it there, guys. Any questions, comments? I know there's a little bit of a change from the last several videos and the number of pairs I look at, but I did talk about why I did that. And like I said, as I move forward, I might try to do something with making videos on some of these futures, some of these stock futures, completely different markets, but fun to trade. Again, with proper risk management. I do find that some of these charts, some of these things move a little bit more predictably than Forex pairs, because you're not dealing with a currency pair where you got to worry about what's going on with both currencies to kind of get a better picture of what's going on. This is just straight up stock futures, stock index futures. And so, you know, and again, these four that I watch, although they are different, they are all stock futures. So they do tend to, when there is an impulsive move, like I said, they do tend to move together, which is extra confirmation. For me, when I want to enter a trade, I'll kind of look, I'll pick the one that I think has the best setup in terms of trading, but I will look at the other three to see if they're all kind of in agreement in terms of the direction. And again, I look at these strictly as day trades for myself. Okay, I'm in and out the same day. Sometimes I'm in and out within, you know, a couple of hours of entering. Whereas a Forex trade, I may hold on to for several days if it's, you know, if it's in my direction. So. All right, so I will leave it there, guys. I hope everybody's doing well. If you just find the channel, please smash the like button. Click that subscribe button in the lower right-hand corner so you get notified when I make a new video. And again, any questions, comments, leave them down below. And we'll update these charts this week. I'll try to promise to be back on the screen a little bit more for you. And take a look maybe at some of these stock indices going forward too in the futures market. All right, guys, have a great one. Enjoy the rest of your Sunday, and we'll talk to everybody soon.